In global listed property, capital moves fast and sustainability rules are tightening. Now it's less about participation and more about who drives the investment story. Welcome to the Growthpoint View, the podcast where conversations that matter shape South Africa's built environment. I'm your host, Denise Mhlanga. In February, the SA REIT conference brought together global and local experts to unpack forces reshaping listed property in 2026. Today, we continue with that conversation with voices that shape the global REIT agenda. We'll unpack trends shaping capital flows and asset performance, the renewed role of the Global REIT Alliance, and South Africa's place as an emerging mature market. We'll also talk about forces shaping resilience and growth, from microeconomic pressures to shifting investor expectations, and what this means for future capital allocation. To unpack the discussion, I'm joined by Estienne de Klerk, the Growthpoint Properties South Africa CEO and SA REIT Association Chairman, and Peter Verwer, the Global REIT Ambassador and FutureFi Executive Chairman. Gentlemen, welcome to Growthpoint View. Peter, especially to you, welcome to South Africa. We would like you to just talk to us a little bit about your role as a Global REIT Ambassador and what that entails before we get into the conversation.
Well, thank you, and it's great to be here. My first time in South Africa.
Welcome.
Yeah. So I've spent most of my career being an advocate for the industry, firstly at the Property Council of Australia, which is the lobbying group for both the public sector and the private sector. In the last 10 years, I've been based in Singapore, spending a lot of time on the new Indian REIT legislation, the Chinese REIT legislation, talking about state-of-the-art Philippines-style legislation as well. And I had a stint during COVID when I stopped working for the private sector, which I've done my whole life, and became a diplomat. I was the Prime Minister's Special Envoy for Global Business and Talent Attraction, which turned out to be very interesting because it gave me a perspective of the underlying demand for what REITs and securitization platforms offer.
Let's really start with you. What's happening in the global scene? Talk to us about the trends, the innovations, and the opportunities for global REITs in 2026.
I think the big trend is that REITs are becoming a global franchise. There's 44 countries that have REITs now, and there's at least a dozen more who see REITs and their governments, not just the private sector, see REITs as a nation-building app, that they're a very effective capital markets vehicle for financing all of the infrastructure, both the hard economic infrastructure, but also the social infrastructure that builds prosperity. So that's a huge trend. And the other trend is that the investment universe, which is encompassed by REITs, which really from the 60s up to the 90s and a bit beyond, up to the global financial crisis, was mainly offices, shopping centres, industrial and a bit of hotels. Not that there's anything wrong with those. But then after the global financial crisis, and particularly in the last decade, has massively expanded, has exploded into healthcare and student accommodation, data centres, and a lot of what you might have been thought of as infrastructure, which is, the difference between real estate and infrastructure, that's a non-issue these days. So these are massive changes, and no doubt we'll talk about this. South Africa has been a big part of that and is moving more to the centre of the global radar screen.
Estienne, let's bring it closer to home. Which of these trends are relevant to South African REITs?
Yes,
and which are going to shape the 2026 market?
Yeah, so I think, my view is that, as Peter's pointed out, you're starting to see REITs invest increasingly in infrastructure. I think uniquely in South Africa, we were forced to do so through COVID and through some of the infrastructure challenges that we've had. So on the one side, when cost of capital got high, a Growthpoint has invested into student accommodation, which is sort of social infrastructure, healthcare, using institutional money to do so and growing that space. And further, we have probably to some extent initially through necessity, but even before that, we had identified from a sustainability perspective investment into solar and electricity generation. And if you go further at the V&A now, we've even got a desalination plant providing that precinct with water. So when we look going forward, I think you're going to see REITs play a bigger role in all sorts of infrastructure. Airports, we're looking at building a new airport in Cape Town, Cape Winelands Airport, where Growthpoint will be playing a big part in the commercial development of that airport. I do believe that water infrastructure and electricity infrastructure are key areas where REITs can play a significant role. And other kind of social infrastructure, schools, hotels, tourism, are all areas where you're going to see significant growth as the sector expands in South Africa. And I think the big key is as the cost of capital comes down, it really does open opportunity to drive capital allocation into those sectors. And I think the legislation, which came into being in 2013 after literally scanning sort of the global legislation frameworks available. I think South Africa's got, I would say, nearly a best of breed in that it's really a tax dispensation with some regulatory aspects, whereas in many other jurisdictions, I believe it's predominantly a regulatory aspect that kind of rewards with some kind of tax benefit. So the reality is, you're getting the best of breed in listed companies and governance. At the same time, you're getting the benefits of those tax dispensations, which makes REITs.
You both touched on infrastructure and alternative assets as an emerging trend in global REITs. How much of that is playing out in South Africa, and are we seeing investor appetite for those investments? Estienne, let's start with here.
Yeah, so post-REIT legislation, which I said came in 2013, clearly that was it was a very long process of 7 years discussing it and finally getting the National Treasury to agree to the legislation at the time. There hasn't been all that much, development post. What we have seen in December, there was unlisted REIT legislation that has been brought in for discussion. So that is obviously extension and a good start. What we have seen is in the private equity space, so not necessarily in the REIT framework, but certainly in private equity space, energy has been a big area of investment in South Africa, and there are large funds that are unlisted, held by institutions and other investors that already exist. So I do foresee that, most of those, the natural progression will be consolidation and those coming into the market, either as REITs or as utility companies effectively. And I do think that will be a trend going forward, and we'll see that for airports and all sorts of other infrastructure, as well as that the sort of partnerships with government build between business and government in South Africa.
And Peter, is it true for the global space? Are we seeing the same thing?
Well, if you look at the two countries which have recently embraced REITs, so it's China and India, the number one reason that they developed REIT legislation was to build the economic and social infrastructure that those countries desperately need. And in India in particular, they actually have an infrastructure investment trust model, which is exactly like an exchange-traded REIT. Well, it is an exchange-traded REIT, but it's specifically designed for infrastructure. And it's interesting that they treat social housing as a utility. So it fits into that infrastructure category. But if we go back to the US, from day one, infrastructure was part of the REIT story. And it's interesting, many of the later countries that adopted it forgot that bit. They forgot housing. They forgot what we used to call infrastructure: airports, seaports, utilities, a lot of the types of assets that Estienne's mentioned. And now the recent countries have remembered it again and said, do we need a REIT for offices and shopping centres? No. Do we need a REIT in order to build the schools and the healthcare and connect up our regions? and create these airports and seaports and data centers and the digital connectivity? The answer is yes. So the best of breed legislation doesn't ban that, doesn't make it ambiguous. It makes it crystal clear that there are incentives to use REITs for building infrastructure.
And in terms of capital flows and capital allocation, where are we seeing that going in terms of region and in terms of asset class? Let's start with you, Peter, from a global perspective.
The world's biggest REIT is a healthcare REIT, Welltower REIT. It's 128 billion USD. It's bigger than the entire Australian REIT market, which is number 2 in the world after US. Bigger than the entire Japanese REIT market, which is number 3 in the world. And then we've got data centers. Retail is coming back up again after a long absence. Office is coming up, is still good as well, but it's really this economic infrastructure. The second part of the question is which countries. So China and India have gone from 0 market cap in 2020-21 to 50 billion USD in India as of a couple of weeks ago, and China is 32 billion USD from a standing start, 5 years. That's huge growth.
Huge. And that's lots of capital we're talking about here. And looking at what's happening locally, there's been a lot of activity in the market in the last 2 years. And just in the past few days, Estienne, we've been reading about the big 2 deals, Discovery Limited and Growthpoint Properties, Hyprop Investments and Woodlands Boulevard. Are we going to see a lot more activity and are offices coming back, or is it specific to region and location?
Yeah, so I mean, I've just heard a talk where the speaker was telling us how much inflows into the sector there have been and how much capital has been raised. There's been over 1.8 billion of capital inflow into funds, unit trusts, etc., that invest into REITs, and obviously the REITs have also raised significant capital in the year that's just passed. Yeah. If you think about the sort of cycle, in 2017 was the record year of capital raises, over close to 20 billion rand. I mean, it's more humble now at about 6. But as we move forward, as the sector has, on average, has grown in value by 50-odd%. So what we have seen is that the cost of capital's come down, and that really does open up an opportunity for quite a few things to happen. And the other factors is that many of the stocks are trading quite a bit closer to their stated NAV, which makes M&A a little bit more possible, I think, because there's a little bit less resistance to deep discounts, etc., when boards are talking about M&A activity. But it also puts REITs in the position to fund new developments, to make acquisitions in the private market. So, I foresee that if the trend continues, you'll see quite a bit of growth, and you'll also see new listings coming into the market. People that have been on the sidelines will see the pricing that you can get for your portfolios in the listed sector, and they may either list or they may vend in their portfolios into existing REITs.
Peter, you mentioned China and India coming into the REIT space. Are there any regions that are likely going to come into the REIT space in the next 2 years, and how are investors and companies balancing capital recycling and income stability?
Yeah, Poland has been talked about for a while, but they're pretty confident, and it is ripe for having the REIT model, the REIT capital markets app. There, Vietnam, a lot of countries have REITs, but it's like the iPhone 5 version of the REIT. And the opportunity is, let's leapfrog to the iPhone 15, 16, 17, or whatever. Estienne probably already has a 20. So there's a lot of interest there. Yeah. And Asia is a focus. The Asian REITs are already far bigger than the European REITs, and that occurred 15 years ago. Because in many ways, REITs are a growth story driven by middle-class growth, and the 88% of the next billion middle-class people will be in Asia, but Africa is next. And all of the numbers already indicate that there's a lot of momentum there. And Africa has a much younger population too. So I see many of the African nations having the opportunity to look at a REIT model which suits their interests, but clearly there's a lot to learn from the very successful South African model. So there's going to be a lot to be done there. And one of the things hopefully we'll talk about is the opportunity for all of the countries that have rich REIT experience and resources to collaborate and share with all of the other countries that either have REITs and they're not as good as they could be, not best of breed, and those that want them.
Yeah, so Peter touches on a very good point. I think many of if we speak about bringing it sort of back to Africa, many of the markets are still reasonably undeveloped and they're quite small. South Africa clearly has a very sophisticated, deep listed real estate market, and we've learned a couple of things over time, and it's not perfection by any means, albeit we like to refer to it as best of breed. There are a lot of little tweaks that need to be made, and I think expanding it can provide infrastructure. Have dedicated infrastructure REITs is definitely something, and I think we'll get onto the topic of the Global REIT Alliance, but these bridges that we are building globally in the space, really does provide impetus into driving the REIT brand and the principles of REITs into international markets. So if you sit there as a government in Uganda or Kenya or wherever, even South Africa, and somebody like Peter arrives on your doorstep, you listen, because he's got global experience and he's pretty much seen it all. So when we look at, and it is something that we will be talking about at Global REIT Alliance is, what is this best of breed REIT that we will be marketing globally, because to be honest, what's in the US vis-a-vis what's in Australia and what's in in Asia does vary quite significantly, and there are a few characteristics which maybe, Peter, I think you did raise it at our previous discussion. There's some key characteristics that are important for REITs, and I think they are a driver of economic growth, and they are definitely a driver of fixed capital formation on the continent. So they create the environment where people connect.
And with all the positive sentiment coming out of the sector globally, are there potential risks for 2026 that you see?
After you.
Okay, so I think the interesting thing about the world, it is increasingly more complex. Yeah. It has a lot of volatility, not just in peace and prosperity, but also in policy, around the world. And if you go and look at probably one big factor that plays a big role in the world of real estate is interest rates, and to some extent, that's the sort of base is the US that sets the tone for global interest rates, and different countries are in different cycles. So if you go to Australia today, they've just increased interest rates by 25 basis points, and they're looking to increase it above further 25 maybe at the next cycle. In South Africa, my personal view is our interest rates are probably 1% too high relative to where they should be. So we probably in a cycle that will be decreasing, assuming the US reduce interest rates, because I think smaller countries are very sensitive to international capital flows, and small countries like South Africa, we are very dependent on flows coming from offshore to fund our growth and our capital investment in this country. So there's a sensitivity around the currency levels and inflation levels. So all those things have an impact on flows. But if we look at the world at the moment, I think Europe, as Peter said, is I wouldn't say it's been pretty, I wouldn't say stagnant, but it's been pretty flat for some period, and growth has been difficult. Eastern Europe, to be honest, has, together with Australia, post GFC and through GFC been the best performing economies on the planet, and then followed, with the US coming through pretty strongly. Even now, in all the policies that they've pushed through, is driving economic activity, but it's also driving inflation. So I think it's going to be an interesting world that we operate in. Actually, South Africa is looking like quite a nice place, and sitting at the bottom of the continent at the moment. So there's a lot of wins at the top there that we are avoiding. But as you're well aware, some of the policies we have in our country certainly has come onto the global agenda, and that will potentially have an impact on our international trade, which will be bad for the country. But while commodities are having a heyday, we are seeing the benefits of that as a country.
Mm. So, Estienne's mentioned all of the geopolitical risks, and we're in a heightened risk environment. On the flip side, the core competency of a REIT manager is to manage income streams over the long term, is to balance out those risks. Property is a bond with a capital, a kicker, and managing those income streams in turbulent times is what the SA REIT Association's members are good at. So in many ways, and they're better at it, and we look at the returns, than other sectors. If there's a new risk on the horizon, it would be that as the REIT universe expands with healthcare and everything from childcare to memory care in the US, then the skills required to run those businesses or be familiar with those businesses are quite different from the skills required just to get the rents, to manage the rental flows from an office building. But, this is a sector which is totally up for that, and has already shown, look at the US, has already shown that we're quite good at it.
And staying with you, Peter, the Global REIT Alliance is becoming very influential. What is its role, and why should local markets be aligned to it?
The success of REITs, turning them into a global franchise, and the fact that more countries want to have REITs, this very successful model, means there are tremendous opportunities for people to swap notes, to collaborate, to create a toolkit of the best sort of policy ideas. Estienne talks about a best of breed. Some of us in the past have talked about, what is a state-of-the-art REIT? Right? And also a REIT in China. Well, the Chinese regulators were always going on with me, like, REITs with Chinese characteristics. I never knew what that was, but I knew it was important to them. And every country, the REIT has to be customized to it. But one thing's for sure is that countries don't need to start from scratch. When groups like NAREIT and the Property Council have spent millions of dollars, USD, on looking at the research of how REITs contribute to the community, how REITs actually enhance the tax base of countries. They're not a sink or a way of diverting money. How REITs actually act as economic drivers, how REITs can actually ensure that the students have fantastic accommodation. So why start from scratch when we can swap notes? But the most important thing here is that it's not just getting information and the holy wisdom from on high, from Australia or Singapore or the UK. There's, look at the new Sharia REITs. So Malaysia has the best model there. Saudi Arabia is starting to develop them. Pakistan in January, just a few weeks ago, created more certainty about how an Islamic Sharia REIT would operate. There are going to be many countries in Africa that could take this model. And the beauty of the Global REIT Alliance is they don't have to start from scratch. We can just take the best thinking and adapt it to the circumstances of that country for its investors and also the national interests.
And Peter, will this knowledge sharing improve, and how is it going to influence governance, investor confidence, and policies around REITs globally?
First, the governments can't afford the infrastructure that their nations need and deserve. So there need to be smarter forms of funding and financing all of that infrastructure. REITs provide that. And so the number one successful approach of advocacy is to provide governments with a solution. Help the ministers become heroes. Right? They know nothing about REITs. Even in the US, NAREIT, one of the most powerful organizations on the planet, they're constantly teaching 433 House of Representatives people what a REIT is, right? So it's this constant communication about the success of this platform. So I think that's where there's a great opportunity for us to be swapping notes and bringing those messages to politicians in the form, and bureaucrats in the form of solutions, because they've got plenty of problems. As we've heard from the Ehrman survey and Martin Kingston, when you go to governments with a solution, you get a hearing. When you just go to them and say the taxes are too high, local government's hopeless, too many planning delays, all of which are true, then you're not going to make any progress. And so that's where we're going to be swapping those.
Estienne, what's going to be SA's contribution and how will this benefit Growthpoint Properties as an international company?
Yes, so the SA REIT Association is a member of the Global REIT Alliance, and I think our membership there means that we obviously can contribute our views and our experience to the process, but more importantly, we can bring some of the ideas and knowledge globally to South Africa, and that's very powerful when discussing, let's say, with government on policy and changes that need to be made to our legislation. Ultimately, all of those benefits and changes will benefit Growthpoint, and even given that Growthpoint's a global company, those relationships and potentially the changes in different jurisdictions could also benefit us over time.
As we wrap up the conversation from both of you, what 2 key takeaways should investors watch for 2026?
26 is going to be a very interesting year for the REIT sector. I mean, we have seen, the sector year to date probably run just short of 10% already. As interest rates come off in South Africa and bond yields compress further, I think you could see even more share price growth. What we will also see is a improvement in earnings, underlying earnings, with some of the companies. And I do think that you'll find that there is going to be more investor interest in the sector. So you'll get bigger as a sort of allocation of capital to the sector. So at the moment, pension funds have roughly about 4% only exposure to listed property, which is tiny in the scheme of things. Globally, the benchmark is 10 to 20%. So I think those are all things that you will see. So that's pretty supportive of the local sector. And as we spoke about earlier, I do think you'll see more activity in development and M&A.
And Peter, from your side?
I think the big new chapter that will open in 2026, which is going to be the year of AI everything. So that will feed into the productivity of REITs and the efficiency of running a REIT. But as a parallel to that, there will be the tokenization, the beginning of a journey for the tokenization of REITs. So all of the REIT contracting, that'll go onto the blockchain. It's a no-brainer. We don't need a world of more PDFs. But that's a productivity device. The idea of taking what is already securitized and then tokenizing it and creating more access and greater liquidity and more velocity will be a multi-year journey. How long before we see a crypto REIT? I think A, it's inevitable, and B, I think it will take 4, 5, 6 years, maybe 10 years, but that's a blink of an eye. The most important thing is that our industry shapes the legislation and the changes to the legislation in all of the countries, because they haven't been designed for a tokenized on-chain DeFi world. And our industry has to find its own destiny in this new tokenized world. Otherwise, people with absolutely no idea will do so. So that's yet another challenge for our industry, but a very exciting one.
From the conversation that we've just had, it's clear REITs are set for a transformative year in 2026. By aligning international best practice with South Africa's unique market realities, REITs can transform challenges into opportunities, building trust, innovation, and lasting value in 2026. Thanks to my guests, Estienne and Peter, and to you, our listeners. Stay tuned for the next episode.